I'm here now to present to you a bit of fundamental analysis. And this website is the COL Financial website. I have investments and I place it using COL Financial as my broker. So that's why I have something like this. And this is a feature that I would like to share with you. This is called the investment guide from the fundamentals. So the way to go about that is from the tab you choose research and then fundamentals and then investment guide, and this thing will come out. You can also view it in a more enhanced Adobe format, which you can view or print. But I think this format is alright. So let's focus on um the industries and sectors. I mean, so let's focus first on the banks and financials. And the way I want you to look at it is uh, look at the average of the sector. For example, for banks and financial, the EPS growth posts only a 2% EPS growth for all the banks. The price earnings for the year 2017 is around 18.1. Price to book is 1.8. Dividend yield is 1.2. I don't pay much attention on the dividend yield because I want growth and I don't want them to return the cash to me as of the moment. But just look at the EPS growth and compare that to the price earnings. Basically, if you will look at this, the price earning outweighs the EPS growth. According to Peter Lynch, One Up on Wall Street, and all those beautiful books that he wrote in the past, the price earnings should be around 1.52 times the EPS growth. So if you will compare the EPS growth of 2%, the price earnings should be around only 4. So this is a bit, you know, bad for investment. But you can go through the individual stocks and see that there are indeed companies that are promising. For example, East West Bank, the price earnings is 9.5, clearly below the price earnings of the market of the sector, and the EPS growth is 30% as of the moment. So that is even greater than the price earnings. So this is potentially a good buy. Uh, Philippine National Bank negative as of the moment. UUBP, uh, no China Bank. Metro Bank is a bit okay, 13% growth, 15%, 15.3 price earnings. Security Bank, all right, 12 versus 18.8. BPI, no. Banco de Oro negatives. And then look at the price to book here. Look at companies that are trading close or even below the price, the book value. And you have East West again at 1.1, so around 10% markup only of the book value. And also Philippine National Bank, which is even trading at only 70% of the book value. But maybe PNB is trading that way because it's not growing at all. I mean, as of the moment. So that is why with the banks and financial, I would go for East West Bank. Guys, I'd like to also remind us that this is as of February 14. I think they will come out with the new investment guide probably tomorrow. So let's look at that again. So with banks and financial, maybe East West Bank is a company worth considering. Down the commercial and industrial, EPS growth is 9%. You have Petron growing at 74%, and so on. Remember that the growth here is, I think, short term, right? So you may have to do your own research and do not rely on the numbers here, especially if the numbers are way optimistic. It's better to be safe than sorry. So if, for example, they say 74% the growth of Petron, you may look at it in the long term. Look at the business week.com, look at the 4-year data, look at the 5-year data. If the company posts a growth that has, in a way, what I do is just double. If the net income doubled in the last 5 years, then that's a good thing. It's about 16-17% growth over the last 5 years. The price earning of Petron is 9, so possibly this is also a good indicator that maybe Petron is a good company to buy as of the moment. IMI is also there. ICT is also there. For conglomerates, we have JG Summit is growing very aggressively. DMCI, although the price, yeah, DMCI is also good because your earnings is 28%, while your price earnings is only 11.9. So every time the EPS is higher than the PE, then that's a good thing. Now look at First Philippine Holdings again, trading at below for only 40% of the price to book, and it may be attributable to the fact that it is not growing, it's even shrinking in its EPS growth. I've been an investor of First Philippine Holdings in the past, and I don't know whether I still own the stock right now, but that's really the problem of the Lopez's. They usually have negative growth. That's why they are trading usually at around less than 10 times price earnings. So you have to be very careful with all those. Okay, consumer negative growth, price earning a bit high. Maybe steer clear of that one. You look at Jollibee trading at 44 times, 8% only EPS growth. So maybe don't go that way. For gaming, you have 108% growth. You have Bell Corporation, Bloomberry, uh, all good companies. But again, in the short term, mining, Nickel Asia is the EPS growth is 77%. Price earnings 13.9 times. But again, mining companies tend to be a bit tricky, so just study your fundamentals very well before plunging into it. For power, you have first gen, 10 times price earnings. But again, another Lopez company, negative growth. EDC, another Lopez company, 9%, negative 9%. So it's shrinking by 9%. The price earning is 12. Look at first gen, trading only at 50% of the book value. Aboitiz Power is also negative as of this moment, but maybe power is a good long-term consideration because of the things that is going on in the country. Maybe that's a good way to go, but in the long term. On the other hand, for property, you have 11% EPS growth for the sector. Ayala Land is growing faster, a bit faster than that. But if you will look at all the property stocks listed here, they're more or less of the same footing, except for Vistaland, growing only 2%. Price earnings wise, it will still be maybe Philinvest Land, EPS growth of 10%, price earnings of 8.2 with only 70% price to book. Maybe Fly is a good stock to consider. Lastly, we have the telecoms, the PLDT versus Globe. PLDT growing at 41%, Globe shrinking at 12% as of the moment. 11.9 times for Philippine long distance, 17.6 times for Globe. So here, as of the moment, it's PLDT, a good stock to consider. So with all that, that's how we do our analysis, for at least shorthand analysis, using the investment guide of COL Financial. So if you have questions, just hit me up, and if you have questions about any particular stock, just leave some comments or PM directly. Thank you very much. Bye.